Before we talk about money, let me ask you something more important. How does your money make you feel? When the lights are off, the phone is down, and the world is quiet. Does it give you calm or tension? For many people, wealth is imagined as freedom. But in practice, money often becomes another source of anxiety. Checking prices late at night, waking up to market alerts, feeling a subtle knot in the stomach when the economy is mentioned. This raises a question we rarely ask. What's the point of building wealth if it costs you peace? Tonight or today, let this play in the background. There's nothing you need to do, nothing to calculate, just listen. Because this isn't about chasing higher returns, it's about building something quieter, a way of investing that doesn't steal your sleep. This is the idea of the Serenity Portfolio. There was a time when investing was slow. Prices were checked occasionally. Information arrived with delay. Decisions were made infrequently. People invested, then lived their lives. Today, investing has become entertainment. Charts flash constantly. Predictions arrive hourly. Every movement feels like a verdict. The market no longer whispers, it shouts. And the human nervous system struggles to adapt. We were never meant to emotionally process thousands of micro-signals per day, especially when those signals involve our sense of security. As investing became faster, it also became noisier. And in that noise, many people lost sight of the original purpose of money. Not excitement, not stimulation, but stability. The Serenity Portfolio begins with a simple shift in perspective. We don't ask, how much can this make me? We ask, how does this let me live? The real goal of investing. At its core, investing is a transfer across time. You give up resources today to improve your life tomorrow. But tomorrow isn't just a number on a spreadsheet. It's a future version of you. Tired, hopeful, aging, human. A good investment respects that future self. A poor one exploits your present emotions. The Serenity Portfolio is built with the future self in mind, not the present ego. Risk isn't just volatility. Traditional finance defines risk as price movement, but psychological risk is something else entirely. It's the stress you carry, the anxiety you feel, the mental space money occupies. An investment that earns well but dominates your thoughts is expensive. True risk includes sleep disruption, emotional volatility, constant monitoring, fear of loss. The Serenity Portfolio minimizes psychological cost, not just financial drawdowns. Why complexity increases anxiety? Complex systems demand attention. The more moving parts an investment has, the more cognitive energy it requires. Multiple strategies, constant adjustments, frequent decisions. This creates mental noise. Simplicity, on the other hand, creates trust. When you understand what you own deeply, you don't need to watch it constantly. Clarity breeds calm. The Serenity Portfolio favors what can be understood without effort. Time as a stabilizer. Time is often framed as a risk, but time is also a filter. Over long horizons, noise fades, trends emerge, mistakes smooth out. Short-term thinking magnifies uncertainty. Long-term thinking absorbs it. A Serenity Portfolio is aligned with time, not against it. It doesn't demand constant action. It invites patience. And patience is calming. Cash is not failure. In many financial circles, holding cash is seen as wasted potential. But cash has a hidden value. It absorbs shocks. It creates optionality. It provides emotional stability. Cash reduces pressure, and pressure leads to poor decisions. A Serenity portfolio respects liquidity, not as an investment return, but as psychological insurance. Sometimes, doing nothing is the most rational act. Diversification as emotional design. Diversification isn't just about math, it's about sleep. When all outcomes depend on one variable, anxiety rises. When outcomes are spread, fear softens. A well-designed portfolio doesn't require predicting the future. It survives multiple futures, and survival brings peace. Income versus appreciation. There is something deeply calming about income. Rent arriving, dividends paid, interest credited, not because it's higher, but because it's tangible. Income turns abstract wealth into lived experience. It reassures the nervous system. A Serenity portfolio often includes assets that quietly provide, without drama. Why slow growth feels safer. Fast growth excites the mind. Slow growth calms it. Rapid gains invite comparison. Comparison invites fear. Slow growth aligns with reality. Most meaningful things grow quietly. Trees, trust, wisdom. The Serenity portfolio mirrors nature, not social media. The cost of constant optimization. Many investors fall into a trap. They are always improving, always adjusting, always optimizing. But optimization never ends, and the mind never rests. At some point, better becomes the enemy of good enough. A Serenity portfolio accepts imperfection. It trades marginal gains for enduring calm. Owning less, understanding more. Some people own dozens of assets they barely understand. Others own a few they know intimately. The second group sleeps better. Understanding reduces fear. Fear comes from the unknown, not from risk itself. The Serenity portfolio values depth over breadth. The role of routine. Routine is underestimated in finance. Predictable contributions, consistent behavior, familiar structure. Routine reduces decision fatigue, and fewer decisions mean fewer mistakes. Calm systems outperform emotional ones over time. When markets fall, market declines are inevitable, but panic is optional. A Serenity portfolio is built with the assumption that downturns will happen. Not as a surprise, but as part of the process. Preparation reduces emotional shock, and shock is what causes damage. Freedom is not maximum return. The culture tells us to chase maximum upside, but freedom is not found at the peak. It's found in stability, in knowing that a bad year won't ruin your life, that uncertainty won't break your identity. The Serenity portfolio optimizes for resilience, not bragging rights. When money stops being the main character, there is a subtle moment in every investor's life, a moment when money slowly stops being the center of attention and starts becoming part of the background, not ignored, not neglected, simply trusted. This moment doesn't arrive through higher returns. It arrives through design. A Serenity portfolio is built so that money no longer demands emotional supervision. It functions quietly, like a well-set clock. You don't stare at it all day. You trust that it's working. The difference between watching and worrying. Many people believe they are keeping an eye on their investments, but there is a difference between awareness and worry. Awareness is light. Worry is heavy. Awareness checks occasionally with curiosity. Worry checks compulsively with tension. The Serenity portfolio is structured to reduce the need for constant checking, not by hiding risk, but by accepting it calmly. When you accept uncertainty, you stop fighting it. And when you stop fighting, your mind rests. Why predictability feels so comforting. Humans crave predictability more than excitement. Excitement is stimulating, but exhausting. Predictability is boring, but stabilizing. A portfolio that behaves within expected boundaries calms the nervous system, not because it never fluctuates, but because fluctuations feel familiar. Familiarity turns fear into tolerance, and tolerance is the foundation of long-term investing. The role of identity in financial stress. Here's something rarely discussed. Many people tie their identity to their portfolio. When markets rise, they feel intelligent. When markets fall, they feel inadequate. This emotional entanglement creates suffering. A Serenity portfolio separates identity from outcome. It reminds you that market movements are not personal evaluations. They are weather. You don't blame yourself for rain. You prepare for it, and preparation creates calm. Why fewer decisions create better outcomes. Every decision carries emotional weight. Choosing when to buy, when to sell, when to adjust. Too many decisions create fatigue. Fatigue leads to shortcuts. Shortcuts lead to mistakes. A Serenity portfolio reduces the number of decisions required, not because decisions are bad, but because unnecessary decisions are expensive. Fewer choices mean clearer thinking. Clear thinking means fewer regrets. The comfort of knowing enough. One of the most powerful concepts in personal finance is rarely taught: enough. Not maximum, not optimal, not perfect, enough. A Serenity portfolio is built around sufficiency. Enough growth, enough income, enough safety. When you define enough, anxiety loses leverage. Without enough, the mind keeps chasing, and chasing never rests. When wealth becomes quietly invisible, as serenity increases, something interesting happens. You think about money less, not because it disappeared, but because it integrated. It no longer interrupts your thoughts. It no longer dominates conversations. It no longer demands reassurance. This is not detachment, it is maturity. Money becomes a tool again, not a signal of worth. The trade most people never consider. Every portfolio makes a trade. Some trade peace for potential. Others trade sleep for upside. Others trade simplicity for excitement. The Serenity portfolio makes a different trade. It trades a portion of possible return for emotional stability. This is not weakness, it's intention, and intention leads to consistency. Consistency is the real edge. Markets reward those who stay. Not the smartest, not the fastest, the ones who endure. Endurance requires emotional energy, and emotional energy is preserved through calm design. The Serenity portfolio protects consistency, and consistency quietly compounds. Why this approach feels unfashionable. In a world obsessed with speed, serenity looks outdated. Calm doesn't trend. Patience doesn't go viral, but timeless strategies rarely do. They don't need attention, they need time. And time, when respected, gives back generously. Preparing the mind for stillness. As a portfolio becomes calmer, the mind follows. You stop searching for reassurance. Stop reacting to every headline. Stop needing constant validation. This prepares you for the deepest shift of all. The realization that wealth is not about control, but about trust. And trust is quiet. Money reflects who we are, our fears, our patience, our values. A restless mind builds restless portfolios. A calm mind builds enduring ones. The Serenity portfolio is less about assets and more about alignment. Alignment between money and life, between ambition and peace, between future goals and present well-being. Perhaps the deepest luxury is not wealth itself, but the ability to ignore it for long stretches of time, to trust what you've built, to live. So let's return to the original question. How does your money make you feel at night? If the answer is tension, it may not be a discipline problem or a knowledge problem. It may be a design problem. The Serenity Portfolio is not about doing more, it's about choosing wisely, and then letting go. Letting time work, letting systems function, letting silence return. Because in the end, wealth is not measured by how closely you watch it, but by how little you need to. True wealth doesn't shout, it doesn't rush, it doesn't steal your sleep. It waits, and it lets you rest. If you enjoy calm reflections about wealth, investing, and the human side of money, subscribe to Quiet Money for more. In the end, true wealth isn't counted, it's felt in peace.